All right, ready? Do I look like the Monopoly guy? I'll tell you, as a kid, I loved the game of Monopoly. You won by basically owning the bank, owning all of the properties. And it kind of reminds me of banks in the real world. I mean, banks are nice, right? They're the big, tall glass buildings. They've got granite countertops. And yet, it's strange that a bank will give you a sucker on the way out. And that's because you're a dum-dum. You've just given them all your money, and you know what they're doing with it? They're rolling in the dough like a baker's knuckles, and they're sharing none of it with you. And today, all that changes.
All in one shot, now the future before us. Go!
All right, so check it out. Today, we're gonna talk about the secret behind banks, how they become so rich, and what you can do to actually get a piece of the action. It's titled, How to Become Your Own Bank. And I promise you, if you've never seen this information before, it's gonna teach you what the rich do. It's gonna be crazy good. So here's the question. Is your bank ripping you off? Only 33% of Americans firmly trust their banks, according to a 2021 Gallup poll. And there are many good reasons for that low percentage. Like, check this out. Banks make money by lending money at a higher interest rate than they give in return to the account holders, AKA you and I. This is called the spread. And as of early 2023, savings accounts only give an average of 0.23% return, while mortgage loans earn banks over 7.5% per year. In other words, the banks will take your money, give you nothing%, and then they lend it out at 30 times the rate, making 30 times more money. And today's question is, how do we get some of that lettuce and some of that arbitrage? By the way, arbitrage is when you're borrowing money at a low rate and you're lending it out at a high rate and you're making the money in the middle. And today we're gonna see if you and I can get some of that arbitrage action going on. Now, this is going to seem a little bit like a magic trick, a little bit like pulling a rabbit out of the hat. But the truth is, we're gonna play the game very different. There are alternatives, but most people don't know about them. And today, Uncle Kris is gonna show you what those alternatives are. There are alternative places to store your money. Bonds offer steady interest payments over time, and real estate assets help retain value against inflation. However, bonds, gold, real estate, they're not liquid, they're not cash, they're not redeemable immediately for cash. This means it's difficult to convert ownership of these assets into immediate buying power in the form of cash, which begs the question then, is there a place where I can take my cash, stash it, earn that positive arbitrage where it's still liquid so that if I want it, I can have it? Well, the best option might actually surprise you not a little. Life insurance is the best way to store cash with a solid return over time while still maintaining liquidity. Now, wait a second, Kris Krohn. Life insurance, isn't that thing that you do like you're gonna die and then your family gets like a payout of money? We're not talking about that. We're talking about something very, very different. A typical cash value policy, for example, offers between a 5, 6, and 7% annual ROI. That's 20 times more than a savings account. Plus, you don't ever have to withdraw any money for cash. You get to simply pull money out of the policy through a loan, and guess what? It's tax-free liquidity. The growth is tax-free, and this account, no one can hack it, no one can touch it, not even the government can litigate against it. It's literally Swiss bank account, one of the smartest places to bank your money, period. So Kris, what's the difference then between a term policy and a cash value policy? Well, a term policy is where you have the smallest monthly payment, and it's basically an emergency. I died and my family got some money. The policyholder does not retain any value from any of the payments, which means once you spent the money, it's gone. But again, there will be a death benefit if you die. And it's cheaper of these two options when you compare a term policy to a cash value. Now, a cash value policy, sometimes called, for example, universal life or whole life, and I mean something very specific, but in general, that concept of cash value means I'm not just gonna put in a little bit for the death benefit, I'm gonna put in extra money because I wanna go in later and I wanna access it. Now, people that traditionally do this kind of policy, they're actually investing in the bank of life insurance that are paying out much higher dividends than your typical bank. And I personally don't believe in investing in a life insurance company, although they've been around sometimes for 100 years, literally 150 years, and they're a great safe place. I'm actually doing it for a different reason. You see, my monthly payments, they go into an interest earning account on top of the death benefit. There's typically a 4% guaranteed return tax-free. There's another 1, 2, or 3% return in the form of a dividend that is also tax-free. Policyholders can use the value of their account as leverage for tax-free flexible payment loans. That means, hey, I'm earning 6% over here, and there's this real estate deal I want to do, or this business that I want to buy. So I pulled out some money and I borrowed it from the policy at 3% while it's still earning 6%, and then I put it into my investment. Well, technically, I'm still netting 3% over here while I'm earning on my money over here. That's wildly different than what most people are doing with their bank accounts. And finally, it does have a higher monthly payment, but remember, that's like putting the extra money into a bank account that is liquid that you get to access so that you can use this as a vehicle for doing some other investing. Not very different than what your bank down the street does. Remember, you park your money in a savings account. They turn around and they lend it out on mortgages, earning 30 times the money. It's time to get back at them at their own game, where you get to put your money in this type of specialized policy that I'm talking about. And then when you want to access it, you can earn money in multiple places at once. You can have your dividends paying you 20 times more money, and you can make money on the investments you roll your money into. So this right here is $100,000. It's 10 stacks of $10,000. And I remember the first time I had $100,000 in my bank account, and I remember seeing this FDIC insured thing with my bank account where they would basically insure my money up until a couple $100,000. And I'm like, oh no, I'm almost halfway to the limit. What happens if I put more than that in my account and then someone defrauds me or someone steals it or someone hacks my account? Then I guess it's not insured. That doesn't seem like a really safe place to put my money. And so I started asking, well, I'm not really like crazy wealthy yet. I'm now a millionaire. I wonder where multimillionaires put their money. And so I started interviewing and asking around, and sure enough, I learned that there's a special type of whole life policy. And it's not something many people know about because it has to be designed in a particular manner where I can put this in and have immediate access if I want to pull it back out so that I can earn money in multiple ways and pick up all the benefits that we talked about before. So I learned this strategy about 15 years ago, and now I have several of these bank accounts. Every year I start a new one. I keep dumping money into them, and then when it comes time to transact business or buy an investment property, I've got a place where I've stashed my cash, and right now I feel like I am getting banks at their own game. I feel like I'm playing the banking game. I feel like I'm winning, and if I could show you a way to win for free like that, wouldn't you want to? Now, it took me a decade to figure out how to get these policies set up the right way. And at the end of this video, I'm going to show you with the link below where you go to actually get one set up for free. But before I do, this all kind of begs the question, like, why isn't everybody doing this? And it causes me to think, well, why aren't more people financially independent or financially free? I mean, we're in a free country. And yeah, you have to exert some effort to save some money so that you can invest it. But I'm like, why don't people budget? Why don't more people save? Why aren't more people investing in real estate if 90% of all millionaires come from real estate? And why are people doing this? Well, here might be another reason. The banking industry generated $1.2 trillion in revenue in 2021 in just the United States alone. That is a lot of money tied up in keeping the status quo and locking people into the same way of life, doing the same thing that we have for generations over and over and over again. But on top of that, most insurance agents are actually incentivized against setting up policies in the way that I just described, where you get to maximize all those living benefits, and their commissions don't exactly correspond with setting up that kind of policy. Their commissions are tied to death benefit, not necessarily your financial freedom, which is why it took me a decade to find the people, the organization that could do it the right way, and I'm about to show you who they are. So 5 years ago, I was introduced to Epic Life Insurance, and Rob Gill, that owns the company. We've built a relationship. We've even since become business partners in multiple different things. And Rob's the first person that I had met in a decade that could actually set up the policy that created maximum benefit for me. And in the link below, there's an opportunity for you to request a free conversation with that team, and they're going to do two things for you. Number one, they're going to do a cash flow analysis. On average, they save someone $9,000 a year that they help you free up to say, hey, make sure you're putting the right amount of money into this bank account. And number two, they actually set up your life insurance bank account for free. And I think that's really cool. But more importantly, they're gonna show you how and why they do it the right way. So click that link right now, become more financially intelligent. If you wanna be a millionaire, you gotta behave like a millionaire. This is what millionaires do. So click that form, talk to the team, get this set up, and start stashing your cash, even if a little bit, in a much more intelligent way, so you can get back at banks at their own game. You can become like the bank, and it will position you to make stronger financial improvements to your financial life. All right then, so how would you use this life insurance policy to actually get rich? Well, I actually interviewed Rob Gill, and if you click right here, let me show you the video. We'll show you exactly how it happens.